JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 22nd of February 2022. So welcome everyone, welcome to this Tuesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which is also updated on a daily basis. So yep, check us out here on jfdbank.com, and yep, click on the research tab right there on the top. So now then guys, jumping into the charts, and of course let's start off with some indices, and I have a bunch of those here. So yep, as you're probably aware, I mean the ongoing tensions in eastern Ukraine continue, so basically that's kind of taking its toll here on the equities. Now excuse me. Now, in a way, everything's kind of still in line with the technical picture that I've kind of talked about previously, that and we were expecting further declines basically if certain criteria would be met, and yep, we can see that. Excuse me guys, my voice has gone down a little bit, but now basically what I was saying, that previously when I, a couple of months ago when I talked about this, I mean I said that further declines could be possible because we kind of made some moves already that were kind of leaning a little bit more towards further declines, and so far, to be honest, everything's what's happening, and although yes, these geopolitical tensions are coming in, but actually everything is kind of working out nicely here from the technical perspective. So looking at Nikkei, for example, here, yes, it's drifting lower. It's trading below this downside line taken from the high of the 10th of February, not to mention, of course, this other downside resistance line taken from the high of the 14th of September. We'll keep that for later. At the same time, yes, I mean it moved lower. What I said previously, if you remember, that if we drop eventually below this hurdle and stay below this hurdle, this 26,765 zone, then yes, I'll go for lower levels, and I'll aim for this area, the 26,327, or even all the way for this 26,057 area, approximately around here. That's near the lowest point of January, and also it marks this level right here, the high of the 17th of November 2020, guys. So very nice potential target here. That's what I'm going to mark here for now. That's what I'm going to be aiming for, and then after that I'll take it from there, because if we do get a rebound, maybe you'll get a nice little double bottom here, and then maybe a nice reversal back to the upside could be possible. So keep that in mind. For now, like I said, yes, I'm aiming lower, but I'm aiming only for this hurdle right here, this 26,000 territory, or to be a little bit more specific, this 26,057 zone right here. And then, yeah, we will take it from there, guys. Shanghai Composite also drifted lower. However, as you can see, it kind of managed to recover, and kind of stayed above this hurdle right here, this this 3,447 mark. And yeah, I mean, of course, initially it was all looking quite doom and gloom here, but as you can see, the markets are holding up here, and so far, of course, we'll see how today's trading session in Europe will go ahead, and the US, because the US is going to come back from a holiday, yesterday Europe, I mean, took a beating a little bit, but I'll get to DAX in a bit. However, for now, looking at the Shanghai Composite here, I mean, yes, we drifted lower. We remained below that 21-day EMA. This is where I need to get rid of this upside line. No longer needed. This is where I need to extend this downside line. Still needed. And in a way, even if we reverse somehow to the upside here, even if we climb back above the 21-day EMA, still I'm being very careful near this downside line. If it holds, another decline could be possible. But if it starts breaking, then yes, maybe we could start aiming for some higher levels. For now, like I said, we are kind of stuck here. In a way, what you can do here is to keep an eye on this hurdle, the low of the 18th of February, which is the low of Friday last week. And if we drop again below it, then yes, I'll aim for this 3,415 zone first, and then I'll take it from there. Now then, Hong Kong's, and of course, don't forget with the Shanghai Composite, this is where I want to show you, we're still in a range, so even if it drifts lower here, there are still good grounds for maybe a bounce here somewhere, and yeah, we could maybe, you know, rebound from here and then go higher. But for now, long story short, let's go slowly on this, because like I said, everything changes very, very quickly. Hong Kong's Seng feeling a little bit worse than its Japanese and Chinese counterparts here. Yep, looking at this picture, you can see that we have a nice we were hoping maybe to see a nice rebound from this upside line taken from the low the 6th of January, but instead we broke here and we drifted lower, and we managed to reach the area which is the low of the 31st of January here near the 23,470 zone. I spoke about this level. We broke this level a little bit here. But we're still trading above it. So in other words, I mean, all this is looking quite interesting. I mean, if we drop below this, yes, and we go further, then certainly lower levels could be met. But at the moment, I'm keeping a close eye on this. I want to see if this is not going to end up, you know, acting as a good bouncing area for this index. If it does, well, first of all, we'll get rid of this upside line, no longer needed. But if it does bounce from that area, well, start kind of you know, looking for some higher levels maybe, because again, this is where it could lead to a maybe larger correction to the upside. I just quickly want to put this one right here. So this area, this is what I'm going to be keeping an eye on. So this area roughly around that 24,000 maybe 200 zone, so approximately around here. I mean, it's because it's more of an area. If we climb above it, then I'll slowly start aiming higher. Of course, from the shorter term perspective, what we'll have here is maybe this downside line that we would need to overcome. But like I said, let's not overcomplicate it yet. First, like I said, let's see what's going to happen with this hurdle. If it fails to provide support, this 23,470, then well, certainly further declines could be possible towards the lowest point of December near the 22,665 level. Now, the German index, DAX, and there we go, guys. So we broke the so-called neckline, and and we broke and stayed below the below this neckline, below the lower side of the range. Well, to be honest, I mean, what I'm considering right now is something like this. So even if we do correct a little bit higher, and let me just quickly check the cash index. I think that there is a slight correction. No, actually, the 14,413. That's where we're currently sitting at. We're basically somewhere around here. So we'll have a beautiful, nice decline here. However, what's interesting here is that, well, basically, first of all, let me start probably a little bit more from the beginning. That in a way, this idea worked out, because what I kept on saying, that if we drop, we get a nice strong move below this neckline, below this lower side of the range, and we stay below it, then yes, further declines could be possible, and so far we're getting that. Now then, looking at this picture, you can see that we are, I'm marking this level right here, this 14,422. We are just slightly below it, so what I can mark then is, maybe I'll recycle this line. I'll remark this low of the 15th of March of 2021, which is roughly around that 14,409 zone. So we're kind of currently stuck in between these two lines. I know it's not very visible, but guys, we're on the cash index. We're currently kind of and then we're basically bouncing around here. So this is quite a strong area of support. Now, if we do rebound from here, yes, so we could go maybe for some upside, maybe for a bit of a corrective move higher. And for now, probably just out of curiosity, what I'm going to draw here is something like this, guys. So we're currently sitting around here. And let me say that if we, this is the nice good move to the downside, the straightforward move lower. So if this is going to be where the floor is going to be, then basically the 23.6% retracement on the Fibonacci is roughly somewhere around that 14,677 zone. So that means that keep your eyes on this hurdle. If, like I said, if it continues to provide support and maybe a nice little rebound here, backup could be possible towards that, a bit of a retracement could be possible. So yeah, and then we'll take it from there. You can see that the 50% retracement is perfectly near that hurdle, near that kind of neckline that I talked about. So yeah, that's quite interesting. But like I said, for now I'm watching this area carefully. This one right here. Let me just probably grab this highlighted territory. Or actually, no, I'm gonna keep this for now. Up, and I'm gonna just copy it right here, guys. So that's what I'm keeping an eye on. Like I said, let's see if this is gonna play out. But for now, it's very, very interesting in how everything is going to continue unfolding. I'm leaning towards the downside, but like I said, I'm keeping an eye on this hurdle for now. Maybe a bit of a retracement could be possible. Dow Jones Industrial Average, very, very quickly on that one. So yes, it was closed on Monday. However, I mean, what I said to you before when I was covering this, that if we drop and stay below this area, somewhere below this hurdle, this 34,300 zone, and we stay below this upside line, then well, this increases the chances for a further move lower. Okay, so we can get rid of this broadening triangle pattern. Did not really work out, so have to admit that. So we need to get rid of it. But actually, I'm going to recycle this line, and I'm going to use it as a downside one right here, which is taken from the high of the 5th of January here, the highest point of January. So in a way, if you're looking for some upside, then well, at least wait for a break above this downside line, and then yes, we could go for some higher levels. For now, like I said, the cash index is sitting at around the 33,620 zones, so below, of course, the psychological 34,000 mark, and well, below this hurdle, and well, we're kind of somewhere in between this area. Let me just grab this line right here. So we're kind of somewhere in between this area right here. To be honest, I'm leaning more towards the downside, even though if we get a bit of a retracement here, my next target is this 33,150 zone. But again, like I said, keep your eyes on the news, or probably the more important, keep your eyes on the headlines. Those give a bit more indication sometimes, yeah, just kind of, it saves sometimes time, and because people tend to react. So if you are that kind of a trader, then well, you probably need something like that. So long story short, for now, guys, I'm leaning towards the downside. Of course, like I said, as with the DAX, maybe a bit of a retracement could be possible as well. However, for now, like I said, I'm a little bit more skeptical with that, and I'm targeting the lowest point of January 1st. NASDAQ Composite, something that I have not picked up for quite a while, but again, I always pick up on the NASDAQ 100, so it moves in a similar way. But I just wanted to have this clear chart here, and as you can see, what's interesting here is that, for example, last time the 21-day EMA was below the 200-day EMA, was back in March 2020, so when the whole pandemic started. So and well, I mean, as you can see here, we have dropped, and the end of January we have dropped below that 200-day EMA. We recovered somewhat. So does that mean that we could see further declines? Well, if we apply the same logic here as we had, then yes, further declines could be possible. However, if you want to be a little bit more on the safe side, well, I would strongly recommend to wait for a drop at least below the lowest point of January 1st. And then yes, we could go maybe for some lower levels. At the moment, I'm very careful here because, well, I mean, like I said, everything can change. I mean, if suddenly, they reach some sort of a resolution, then this could quickly reverse and push higher. However, for me right now, I would rather stick to this area right here near the 14,505 zone. If we climb above it, and we could also climb above the 200-day EMA and go for some higher levels. For now, I am, like I said, I'm being careful here. So if you're looking for some upside, guys, well, it's not there yet. If you're looking for some downside, yes, I'm leaning a little bit more towards the downside, but I'll be very careful near this whole area right there, near the lowest point of January. Now, something that I don't look very often, but yes, it's quite interesting, and that's the Moscow Stock Exchange. So basically, yesterday we already had a bit of a 10% decline. Let me just grab a price range here. So yesterday, basically, it was somewhere around here. So we closed with the around the 12, something like that, 12% loss. Today, as you can see already, we are drifting lower, so we are -7 already percent. But to be honest, I think that's not the end here, because from the technical perspective, we can see that we are, we're kind of going towards this lowest point of November of 2020 near the 2,658 zone. So. Of course, we do have the March levels here, the lowest point of March of 2020. But again, this is, like I said, this is quite interesting here. Certainly presents itself with some nice opportunities, maybe to go long later on, but. For now, guys, I mean, it's just a kind of a falling knife here, but it is, like I said, you need to kind of look at these things, because eventually, if this is going to spill out further into other indices, then, well, it won't look very nice. However, guys, to be honest, as you probably already heard a lot from different other analysts, everybody's talking about this potential maybe correction, to see a nice good correction in the market, kind of to offset the market a little bit, reset it a little bit. So yeah, I'm kind of a 20-25% correction in the market. That's, to be honest, quite normal, I would say, nowadays. But hey, I mean, that's how it plays out. I mean, nobody was expecting, the market kind of to rebound sharply after the pandemic, like it was announced. So even it all looked doom and gloom here when we were back in March 2020. But look, from what happened then, we not only overcame the previous highs, but kind of doubled the drop here. So I mean, yeah, so. It's like I said, so these corrections tend to be nice buying opportunities. However, don't rush into that yet, because again, this could still continue drifting lower, and for now, that's like I said, that's the situation here. So let's see how this is going to play out. Jumping into the DXY dollar index, so yeah, pushing nicely to the upside, and it's here DXY is acting a little bit more as a safe haven, to be honest, and due to the, like I said, due to the tensions, and you might see gold also rising and dollar rising, but here we have, like I said, a situation of more of a safe haven play. So so DXY is pushing higher. It's trading above these still these upside lines, but as what I said to you before, that in order for me to go higher, I need to see a push above that 96.300 zone, and then yeah, I'll get a little bit more comfortable with the upside. For now, I'm not getting that, but I'm very close to this, of course, and if we do jump and stay above it, then yeah, I'll go for some higher levels. Gold, there we go. So almost just left just shy of a few dollars from reaching the highest point of June of 2021 of last year, yeah, so let's see, this is not the highest point of last year. The highest point of last year is right here. There we go. So that's it was reached on the 6th of January 2021. So yeah, if we clear this highest point of June, yep, we'll go for some higher levels. But what I said to you yesterday, that maybe a bit of a corrective move lower could be possible. However, this is if, let's say, if in the ideal world, if if we wouldn't have any announcements made yesterday, then yes, from the technical perspective, it was moving lower, so everything was working out nicely. However, investors started jumping in quickly into gold, and yeah, this is what we got right now. So let's see if we can actually, clear this level here, and or will it actually, provide a good hold up? Because at the moment, looking at this, I mean, we are quite overstretched here to the upside. We're looking for that corrective move lower, a larger correction to the downside. However, we're still not getting it, so that's why I'm going to be very, very careful for now. Another interesting thing here is oil. Oil jumped yesterday. Obviously, the whole supply disruption issue, potential supply disruption issue, might lead to some higher prices. But this is quite interesting to see that there are always winners and losers in every conflict, and sometimes there but it's always better to be on the winning side of the non-participating sides, because here, for example, oil producing countries right now are really enjoying the moment. I believe so, and yeah, you're seeing oil pushing nicely to the upside. I said to you yesterday that if we stay above this 93.34 level, I'll go for the upside. Well, so far everything's working out nicely here. We stayed yesterday. Can we go further north? Well, let's wait and see. For now, I'm sticking to that idea. If we remain above this 93.34 zone, we will continue aiming higher. Bitcoin, quick update, drifting lower. Dollar index is rising, so the dollar is strengthening. So Bitcoin, the crypto world is a bit of on a decline. So, but the only interesting thing here is that we're currently resting near this 36,674 zone. In order for me to go lower, I need to see a break below that hurdle, and my next target is roughly around that 32,850 zone. USDJPY. So looking at this, yep, it's of course the good indicator of market sentiment. So as you can see, yen buying is kind of picking up a little bit, and we're seeing a bit of a decline. However, not a significant one, but as I said to you before, a drop below this 82.28 zone here is needed for me in order to go for lower levels. USDJPY, very quickly on this. So yeah, 114.79 level got broken yesterday. We stayed below it, and today we've tested it from underneath. It acted as a good area of resistance, and we're drifting further south. For now, I'm going to aim for lower levels, but only I'm going to aim for this area here, the current lowest point of February, near the 114.16, and then we'll take it from there, guys. US dollar against the Russian ruble, of course we need to talk about that. And basically, well, this is what I kept on saying. If you remember, I talked about this potential idea of a head and shoulders, and everything was kind of working out nicely here. But what I said, that I need that confirmation break of the neckline, because until we get that, it's not really, we can't really get comfortable with this idea. And also, if the pair ends up breaking and staying above the 77.33 territory, we can scrap the whole kind of head and shoulders pattern idea. And well, there we go. So we managed to get that breakout here, not through the neckline, but as you can see here, we didn't really reach the neckline. Instead, we started reversing higher and we broke this hurdle. So what's next here is that basically I'm keeping an eye on this hurdle, this highest point of January near the 80.40. So far, the Russian ruble is not feeling the love right now, because yeah, we are kind of devaluing very rapidly. And look where we have managed to climb, guys. This 80.95 zone, that's the highest point of November of 2020. We're there, and then our next stop is, of course, this other critical level right here, the at 82.90 zone. So this is going to be quite interesting to see if we can travel all the way there. Then we have this other high here, which is right here. There we go. Let me just try to capture this, guys, this level. This is there we go. Wait, there we go. So I think it's roughly around here. There we go, finally, 85.95 zone. So that's another good good level to watch. Of course, this a temporary, a temporary benefit to all this is that it can make the Russian export a little bit more attractive. However, if this inflation gets out of hand, this devaluation of the Russian ruble gets out of hand, then yep, further consequences could follow. GBPUSD, guys. Drifting a little bit to the downside, but look at this. When I talked about GBPUSD, I said that if we climb above that 200-day EMA, then yes, I'll go for some higher levels, and but for me to get a little bit more comfortable with the upside, I needed to see a push above this barrier right here, this 1.3644. So what I said previously, that yes, we could go for some higher levels, but be careful, we could find a lot of barriers around here, and we did. So now waiting for this nice good pop above this 1.3644 zone in order to go for some higher levels. For the downside, I would rather stick to this area right here. I would like to see a break of this upside line and a drop below the 1.3491 zone, and then we could go from here. EURUSD, guys, very quickly. So what I said to you before, that if it stays above this area, this 1.4463, then we could go for some higher levels, but it had a false breakout. It failed to stay, and of course the rising oil did not really work out well here for this pair, and yep, it started drifting back down. So we're back into this falling channel. Can we drop below that 21-day EMA? Well, we'll just wait and see. If we can, then yes, certainly a bit of a decline here could be possible. For the upside, I'm sticking to the same level here, this 1.4463, in order to go for some higher levels. And finally, EURUSD drifting nicely to the downside, but I mean, everything is expected. So if I said to you that for me the more comfortable level is this one, but if you're not really willing to wait for this level, then we can wait at least for a break above this 1.1396, which we failed to break. So yesterday we came close, but we failed to reach it. And then we drifted back down. So that's why I said I'll remain neutral. For the downside, I need to see a drop below the 1.1235 zone right here, and I do understand maybe I'm missing out on a bit of territory here, but I'd rather be safe than sorry. So guys, that's it for this session. I really thank you very much for watching. I really thank you for joining in and watching this one till the end. I really appreciate that. So if you want to catch me tomorrow morning, as always, at my Traders Espresso, that's 7 o'clock GMT time. Just to let you know that there won't be any Traders Espresso on Friday and the week after that. So yeah, but I'll mention that tomorrow as well. Thank you very much, guys, and bye-bye.